Welcome to the Opening Bell Report.
Okay, picture this. You're at a neighborhood garage sale Saturday morning. You're digging through a box of junk, and you spot this old dusty leather wallet sitting on a table.
Yeah.
There's a piece of masking tape on it that says 82 cents, less than $1. You pick it up, you open it, and inside there is a certified cashier's check for $1.20.
The math is immediate, right? You buy the wallet, you cash the check, and you make an instant, basically risk-free profit.
Exactly. It's an arbitrage. It shouldn't even exist. If markets are efficient, and we're always told they are, that wallet should cost at least $1.20.
Maybe even more if it's, nice leather.
Right. But today we're talking about a scenario where that wallet is a publicly traded company, and the cash inside is over $1 billion in Bitcoin.
It sounds like an accounting error, or maybe a glitch in the matrix, but what you're describing is the very real, very strange situation happening right now with a company called Strive Inc., ticker symbol ASST.
And that is the mystery we are cracking open today. We have a comprehensive analysis report on Strive Inc., and we're trying to answer a billion-dollar question. Is this stock, which people are calling baby MSTR,
A reference to MicroStrategy, of course.
a reference to the legendary MicroStrategy, actually a hidden gem trading at a massive discount? Or is there a reason the market has left this free money on the table? Is it a trap?
It's a fascinating case study because it really tests the limits of what we consider a business in the modern financial era. We've got this stock analysis report here that covers the company's recent massive merger, their financials as of late 2025, and this incredibly aggressive Bitcoin treasury strategy they've adopted.
Aggressive feels like an understatement. But before we get to the Bitcoin hoarding, we have to talk about the pivot. Because if you looked at this company a year ago, you wouldn't have seen a Bitcoin treasury. You would have seen, a digital marketing firm?
That's right. And not even a massive one. Until very recently, this was a microcap company called ASST Entities. They did digital marketing, they managed Discord communities for influencers, that sort of thing. But in late 2025, they went through a radical transformation. They merged with Strive Enterprises and basically burned the boats.
So they just woke up one day, looked at their Discord servers and said, you know what? Forget marketing. We are now a Bitcoin bank.
Essentially, yes. The report details a complete shift in their business model. They explicitly decide to model themselves after the MicroStrategy playbook. The goal is no longer to sell marketing services. The goal is accretion.
Accretion. Okay, that's a finance buzzword that gets thrown around a lot.
Yeah.
We need to unpack that for everyone. What does accretion actually mean in this context?
In the context of a company like this, accretion is the holy grail. It simply means increasing the amount of Bitcoin per share over time. Their entire strategy is to raise capital.
Through debt or selling more stock.
Right, either way. And use that cash to acquire more and more Bitcoin.
Okay, but hang on. If they sell more stock, aren't they diluting the existing shareholders? If I own a slice of the pie and they cut the pie into more slices to sell to other people, my slice gets smaller. That sounds like the opposite of accretion.
That is exactly the tension. You've hit on the core risk. Accretion only happens if they can buy Bitcoin faster than they dilute you. Think of it this way. If they issue 10% more shares, but they use that money to increase their total Bitcoin holdings by 20%, then the amount of Bitcoin backing your specific share has actually gone up.
Ah, that's accretion.
That's the game.
It's the infinite money glitch, or at least that's what they hope it is. But making a pivot like that isn't cheap. You can't just hang a "We buy Bitcoin" sign on the door and call it a day. The report mentions they had to do some serious house cleaning.
House cleaning is putting it mildly. They effectively restructured their entire balance sheet. The analysis highlights that they retired 92% of the debt they inherited from an acquisition of some similar scientific assets.
And that was crucial. You can't build a new, risky strategy on top of old, toxic debt.
No, nobody wants to pay high interest rates when you're trying to buy volatile assets. Yeah. And to fund this whole pivot, they didn't just use pocket change. They raised approximately $225 million via preferred stock.
Wow! That is a massive war chest for a company that was basically a penny stock.
It is, and it creates this tale of two companies that the report really emphasizes. When you look at their financials, you still see these legacy numbers, about $5.5 million in revenue from the old marketing business.
But the report says, what, just ignore that.
The analysis is very clear on this point. Ignore that.
Ignore revenue. That feels so counterintuitive for stock analysis. Usually that's the first thing we look at.
In this specific case, that revenue is just noise. It's irrelevant. If you're buying AST today, you aren't buying it because you think their Discord server business is going to boom. You're buying it for the balance sheet. The new reality, as the report calls it, is that the only metric that matters is the Bitcoin.
Okay, so let's talk about those holdings, because this is where the numbers get kind of mind-bending. This is the voila moment of the deep dive.
Right. This is the valuation anomaly. Let's look at the hard numbers from the report. Strive Inc. holds approximately 13,132 Bitcoin.
13,000. Just for context, most public companies hold 0. Even some of the big tech giants haven't touched it. 13,000 is a fortress.
It's a massive stack. Now, if we assume a market price for Bitcoin around, let's say, $90,000, which is the baseline in our source material, that pile of Bitcoin is valued at approximately $1.17 billion.
Okay, over $1 billion in liquid assets sitting in the vault. I'm with you so far.
But here's the kicker. At the time of this report, the company's market cap, the total value of all its shares, is only about $735 million.
Wait. Let me just do the mental math here again. They have $1.17 billion in the vault, but the stock market says the whole company's only worth $735 million.
Precisely.
That's a sale. That's a massive clearance sale.
The report estimates the stock is effectively trading at a 30% to 40% discount to its net asset value, or NAV.
So to go back to my garage sale analogy, I am literally handing you a dollar bill and I'm only asking you for 70 cents.
That is exactly how the bulls view this trade. It's an arbitrage opportunity. You are buying Bitcoin at a steep discount. If you just went to an exchange and bought Bitcoin, you'd pay full price. Buying AST shares is theoretically buying that same Bitcoin for 70 cents on the dollar.
Okay, but if something sounds too good to be true, it probably is. Markets are usually efficient. Why is the market leaving this free money on the table? Why hasn't some huge fund just bought the whole company and liquidated the Bitcoin for an instant 30% profit? There has to be a catch.
That is the billion-dollar question. And the report suggests the market isn't stupid, it's pricing in complexity. It's not a straight one-to-one relationship because buying the stock comes with, well, baggage.
What kind of baggage?
Legal.
Structural baggage. First, there's the capital structure. We mentioned they raised money via preferred stock, specifically something called SATA shares.
SATA sounds technical. Let's break that down. Is that like a special class of stock? Exactly. Preferred equity means exactly what it sounds like. They get preferential treatment. These shares sit above the common shareholders. That's you and me buying the stock on an app in the pecking order.
So if the company were to dissolve tomorrow, the SATA people get paid first.
Right. And specifically in a liquidation event, the market looks at that $1.17 billion in Bitcoin and says, okay, that's a big pie. But how much of that actually belongs to the common shareholder? And how much is implicitly owed to these preferred investors?
So the pie might be big, but there are some VIPs at the table who get served first, and we're just waiting for the leftovers.
Exactly. It muddies the calculation of the NAV. The market is discounting the common stock because of that priority layer above it. And then there's the management risk. Remember, this is a company that just pivoted.
They're flying the plane while building it.
Yes. The market is waiting to see if they can actually execute this strategy without blowing up the ship.
Which brings us to the risks, because the report is pretty blunt about the fact that this is not a risk-free bet. This isn't just buy stock, get free money.
No, absolutely not. And the biggest contrast here is with MicroStrategy. When people call AST baby MSTR, it's not a perfect comparison.
Right, because MicroStrategy has a day job.
Correct. MicroStrategy has a legacy software business. It's business intelligence software. It's not huge compared to their Bitcoin, but it generates cash flow. Real dollars coming in the door every month.
That cash helps service the debt they take on to buy more Bitcoin. It's a safety net.
A huge safety net. And Strive Inc. Does the Discord management pay the bills?
I'm guessing not.
Not even close. The report shows their operating income is negative over $60 million in the hole. Their net income is deeply negative, around negative $223 million, largely due to those one-time merger costs.
Ouch. So they are just burning cash.
They are burning cash just to exist. And this leads to a really interesting point the report makes. Without a profitable product, their business essentially becomes selling shares.
That's a fascinating way to put it. Their customer is the investor.
It's the reality. They have turned the stock market into their customer base. They sell shares to raise cash, use that cash to buy Bitcoin.
Which works great as long as people want to buy the shares. It's a confidence game.
Exactly. But it creates a massive risk, dilution. The report highlights that there are around 897 million shares outstanding. That is a huge number for a company this size.
That is a lot of slices of the pie.
And if they have to keep printing more slices to keep the lights on or to buy more Bitcoin, the value of your slice, the slice you bought for 70 cents on the dollar could get diluted away.
So let me see if I get the trap. I buy the stock because it's cheap relative to the Bitcoin. But then management issues another 100 million shares to pay the bills and buy more coins. Even if Bitcoin goes up, my personal share of the Bitcoin might actually go down.
That's the dilution trap.
Yeah.
And it's why the discount exists. You are getting a discount on the Bitcoin because you are accepting the risk that management might mishandle the share count. You're betting on the jockey, not just the horse.
It's a trade-off. You get cheap Bitcoin, but you have to trust the pilots.
And speaking of fuel, let's talk leverage. The report mentions they are structurally leveraged. They retired that $110 million in high-interest debt, which was a good move.
Right, getting rid of toxic debt is always a smart play when you have no income.
But they replaced it with those SATA preferred shares. It's a form of equity financing that avoids monthly interest payments, which is smart. But it's still leverage. It amplifies everything.
So when things go up, they go up huge. But when they go down,
They crash. It acts as a multiplier on the Bitcoin price.
let's widen the lens a bit. The report calls this the Bitcoin proxy war. I love that title. Who are the combatants here? Because Strive isn't the only one doing this.
No, it's becoming a sector of its own. First, you have the king, MicroStrategy, MSTR. The report calls them the gold standard. They traded a premium to their NAV, sometimes 2 to 3 times the value of their Bitcoin.
Right, so MSTR is the opposite of Strive. With MSTR, you are paying $2 to get $1 of Bitcoin because you're paying for the safety and the track record.
Exactly. You pay a premium for the brand. Then you have Semler Scientific, SMLR. They are the health tech pivot. They use cash flow from medical devices to buy Bitcoin, a moderate risk.
And then there's our friend Strive, ASST.
The aggressive newcomer. The report defines AST as the high beta version of MicroStrategy.
High beta. Let's break that down for the non-Wall Street listeners.
Beta just measures volatility. A high beta means it swings harder. Because AST starts at a much smaller market cap, $700 million versus tens of billions, it takes less money to move the stock price.
So if Bitcoin goes on a run, AST could theoretically skyrocket way faster than MSTR.
That's the bull case, higher percentage gain potential. But the downside is equally violent. If Bitcoin sneezes, AST could catch pneumonia.
And there's another dynamic the report mentions, the short sellers.
Yes, short interest is rising. Skeptics look at these copycat Bitcoin stocks and they think it's unsustainable. So they're betting the price will fall.
But high short interest can also act as rocket fuel, can't it?
It can. If the price starts to rise, say Bitcoin hits a new all-time high, those short sellers are underwater. They have to buy back the stock to cover their losses. When they buy, it drives the price up further, forcing more shorts to buy.
The classic short squeeze.
Exactly. It can send the price parabolic. It turns the stock into a powder keg.
So let's look at the crystal ball. It's cheap, it's risky, it's volatile. What does the technical outlook say? What are analysts predicting?
The consensus in the report is currently a moderate buy. They cite a 12-month price target of around $1.50.
$1.50, and it's trading around 82 cents right now. That's, what, nearly double?
It's about an 82% upside from current levels. A massive move if it plays out.
What are the key levels we should be watching on the chart?
On the downside, support is at 74 cents. That level has held firm, so there are buyers stepping in there. They think 74 cents is too cheap to ignore.
And on the upside?
You have resistance at Dow 185, and then the big psychological barrier at $1.
The dollar menu. Once you break a dollar, the psychology changes.
It really does. It sounds silly, but many institutional funds have rules against buying penny stocks, stocks under $1. If AST breaks $1 and holds it, it suddenly becomes eligible for a whole new class of investors.
And is there a catalyst, something coming up that could trigger a move?
The report points to the upcoming earnings report.
But wait, didn't you just say their earnings are terrible? Why would that be a positive catalyst?
Because it will be the first clean report. The previous ones were messy, full of one-time charges, merger costs, restructuring fees. It was hard to see the signal through the noise. This next report will be the first time the market sees the full Bitcoin stack on the balance sheet without all that accounting chaos.
It's the proof of life moment. It proves they actually did what they said they were going to do.
Exactly. But ultimately, the report emphasizes a binary outcome.
Binary meaning it goes one of two ways. No middle ground.
Pretty much. The stock is a leveraged Bitcoin ETF. If Bitcoin hits $100,000 or more, ASST should outperform almost everything else. But if Bitcoin crashes,
Don't say.
the report warns that AST could fall below 40 cents. Without an operating business to fall back on, they are entirely at the mercy of the asset price.
It's high-stakes poker.
It really is.
Yeah.
You are investing in a marketing company. You are betting on the direction of Bitcoin, magnified by leverage.
So let's try to summarize this. What's the final verdict from the report?
The verdict is that AST is a speculative arbitrage play. You are buying Bitcoin at a discount, buying $1 for 70 cents. But the fee for that discount is risk. You are taking on management risk, dilution risk, and structural risk.
It's for the adventurous, not for your retirement fund that you need next year.
Precisely. It's for those who believe in the MicroStrategy model, but missed the boat on MSTR when it was cheap. It's a younger, cheaper, and much, much more volatile entry point.
You know, this whole deep dive has me thinking about something bigger. We're seeing a company that exists solely to hold an asset and sell shares. It doesn't make anything.
Right. It raises an incredibly provocative question. If a corporation's only purpose is to hold an asset like Bitcoin, and its only product is its own stock, does the traditional definition of a business even apply anymore?
I know, right? Usually we judge a business by its PE ratio, its revenue growth. For companies like Strive Inc., those metrics are completely meaningless.
We are witnessing the birth of a new asset class,
Right.
where the corporation is the ETF. It blurs the line between corporate finance and investment vehicles. We almost have to invent a new language to evaluate them because the old textbooks don't have a chapter for this.
And that is a wild thought to leave you with. As always, none of this is financial advice. Do your own research, read the
Don't forget to like, share, and subscribe for more.